Yes, if you had invested just $1,000 in NVIDIA a few years ago, you'd be sitting on a small fortune today. But the reality is that the opportunity has passed. Dwelling on missed millionaire rallies won't help you create the next one. Now's the time to shift focus. Because while you were watching Palantir soar past expectations, other high-conviction AI opportunities were quietly accumulating. And let's be real, most of the names dominating today's AI headlines are already trading above $100, making it difficult for many retail investors to get in before the real gains even start. So, what's next? The smartest investors are shifting their focus to look for early-stage AI disruptors and small-cap tech stocks with strong fundamentals that are poised for growth. You don't need to chase hype. Instead, you should identify what the top 1% are buying before it becomes mainstream. But what if I told you there are still a few undervalued AI stocks quietly gearing up for a breakout and could be the next Palantir? These aren't your typical targets. No Wall Street spotlight. We're talking about 3 hidden AI tech stocks flying under the radar that have real technology, strong growth potential, and the chance to 10x in the next few years if they execute well. These are early-stage disruptors, building scalable infrastructure, forming innovative partnerships, and capitalizing on the massive boom in AI and data. Stock number 1? It's so off the radar that even institutional investors haven't spotted it yet. But before we begin, this isn't financial advice. This information is for educational and informational purposes only. Remember, early-stage AI stocks carry risks, but with those risks, there's also significant reward potential if you play your cards right. If you find value in content like this, hit that like button, share this with someone hunting for hidden gems, and subscribe so you don't miss the next high-potential opportunity. All right, first pick is BlackSky Technology, ticker symbol BKSY, the defense tech underdog quietly building a moat. While investors chase NVIDIA's next big move or pile into the latest ChatGPT-driven stock, a small-cap satellite intelligence company is quietly growing its presence in orbit. Year-to-date, BlackSky stock has surged by an impressive 124%, and this isn't just a speculative spike. The fundamentals are evolving, the technology is solid, contracts are steadily flowing in, and institutional investors are beginning to take notice. So, what's the story behind the ticker? BlackSky Technology. BKSY isn't aiming to compete in the crowded world of general-purpose AI. Instead, it's focusing on a specialized niche that few are talking about: real-time geospatial intelligence driven by its satellite network and AI platform. Imagine Palantir, but with exclusive control over the data source. That's BlackSky. The company owns and operates one of the world's most advanced low-Earth orbit satellite systems, providing its AI-powered Spectra platform with high-frequency, ultra-high-resolution imagery. This isn't hypothetical. This is mission-ready technology used by U.S. defense and intelligence agencies, as well as international allies. Recently, BlackSky secured a $24 million contract through the NGA's Luno A FOMO program, which focuses on monitoring global military and economic sites. This adds to its existing $290 million multi-award IDIQ contract, strengthening its strategic role in national security. What makes BlackSky unique is its launch of Gen 3 satellites, which can capture imagery with a 35-centimeter resolution. That's clear enough to identify aircraft, naval vessels, and vehicle types in near real-time worldwide. With 2 Gen 3 satellites already in orbit and 4 more scheduled to arrive this year, BlackSky is expanding its coverage and capabilities as global demand for space-based ISR, intelligence, surveillance, and reconnaissance increases. BlackSky's momentum isn't happening in a vacuum. Defense technology spending is increasing rapidly, particularly in response to rising geopolitical tensions and NATO's expansion. Citi's bullish outlook on space and aerospace tech has lifted sector sentiment. And with Fed rate cuts on the table, risk-on appetite is returning, especially for high-growth small caps like BKSY. Furthermore, President Trump's approval of advanced weapons shipments to Ukraine has only heightened BlackSky's relevance, as the company has already secured international contracts directly linked to Ukraine's real-time intelligence efforts. Looking at this AI tech stock from Technical Breakdown, should you chase or wait? Breakout confirmed above $24 with substantial volume $20 now acting as key support, with $15 as secondary RSI indicates an overbought condition, which is common in breakout setups. A short-term pullback to $22 may offer a favorable entry point. A break above $24.50 could signal the next move higher. Meanwhile, the question remains, is BlackSky the next Palantir stock? BlackSky isn't just promoting a story, It's delivering on a mission-critical niche with long-term defense contracts, proprietary infrastructure, and scalable AI. This creates a potent combination in an era of asymmetric threats and rapidly evolving military technology. Yes, it's volatile. Yes, it's under the radar. But that's precisely where breakout opportunities often begin. With a market capitalization under $800 million, this company still holds considerable growth potential. As Gen 3 launches progress and government contracts grow, BlackSky could shift from being seen as merely speculative to a more strategic investment by more serious investors. Would you add BKSY to your watch list, or are you waiting for a dip to buy in? Let's talk in the comments. Alright, this stock is very familiar and has appeared multiple times in our videos. BigBear.ai's ticker symbol is BBAI. Could this stock be the next Palantir? Let's examine its latest news and determine if it still holds potential. BigBear.ai Holdings, BBAI, has gained significant attention in the AI defense sector, and savvy investors are taking note. Following a remarkable 86% increase in just the past 30 days, many are asking, is this merely momentum, or is BigBear.ai on track to become the next Palantir? At a glance, BBAI is still trading well below its 52-week high of $10.36, but it has an impressive 5 or 14% gain over its lows. While most AI stocks have already soared into triple digits, BigBear.ai remains a relatively affordable choice with a forward price-to-sales ratio of just 11.66 compared to the industry average of 19.3, but valuation alone doesn't move markets. What's driving BigBear.ai's growth? It starts with its expanding presence across key sectors. From a $385 million backlog and major government contracts, including the DoD's Joint Staff J-35 Orion platform and Project Linchpin, to global partnerships in the UAE, BigBear is performing accurately. Their AI-powered platforms, like Conductor OS and ProModel, are now supporting real-world applications in homeland security, airport surveillance, and even Amazon's warehouse optimization efforts. New CEO Kevin McAleenan has implemented a sharper strategic focus, aligning BBAI with significant national security priorities and forming alliances with Palantir, Amazon, and Autodesk. This isn't just hype, it's real technology with genuine utility. Let's not overlook the financials. BBAI finished Q1 2025 with $107 million in cash, up from $50 million just months earlier. It decreased its long-term debt by $58 million, strengthening its balance sheet while expanding operations. Revenue increased 5% year-over-year to $34.8 million, with more growth potential ahead. Yes, the company is unprofitable, but just like Palantir in its early days, BigBear.ai is making a long-term bet, reinvesting, scaling quickly, and winning the data war in defense and intelligence. So, is this a buy, hold, or sell? For investors seeking a buy opportunity, a breakout above $7.50 with volume could trigger the next leg higher. Dips around $6 to $6.20 may offer excellent entry points. For those holding, if you got in early, staying the course may reward you momentum, and institutional signals are strong. For a sell, a close below $6 would be a red flag watch for $5 as the next potential support level. BigBear.ai shows all the signs of a future compounder, strategic contracts, a rising defense tech tailwind, meaningful partnerships, and an improving balance sheet. Is it the next Palantir? Time will tell. However, one thing is clear. BBAI isn't just following the AI trend, it's helping to define it. Would you consider BBAI for your watch list? Or is it too early to tell? Let me know in the comments, and don't forget to like and subscribe if you're hunting for the next generation of tech winners before Wall Street catches on. Back in May, with a deep dive in prices, we brought Oklo stock, ticker symbol UKLO, to your radar when it was still flying under the $30 mark. Fast forward to today, and it's now trading above $60, doubling in just a few short months. That's a 100% gain for early believers. First off, hats off to everyone who took that conviction bet when we made the call. You followed the data, acted ahead of the crowd, and it paid off. But now the big question looms. What's next for Oklo stock? Is this simply a short detour in a multi-year growth path? Or have we reached a ceiling in the near term? Let's explore the fundamentals and technical aspects to break it all down. Why Oklo isn't just another nuclear startup. Let's start here, because Oklo isn't a typical energy stock. The company is pioneering small modular reactors, SMRs, compact, safe, scalable nuclear systems designed for off-grid locations, national defense infrastructure, and industrial applications. Unlike traditional nuclear models, which require extensive infrastructure, Oklo's method is designed for quick deployment, efficient energy conversion, and reduced risk. This represents next-generation nuclear, tailored for a world that needs clean, resilient, and secure energy. What truly sets Oklo apart? A 20-year fuel recycling contract with the U.S. Department of Energy, backing from Peter Thiel and high-profile institutional investors. Over 60% insider ownership indicates strong long-term confidence from those with the most knowledge. Although the company is still pre-revenue, it has a solid position. It's not just riding the nuclear hype cycle, it's built on contracts, credibility, and capital. As governments worldwide intensify their focus on clean energy and energy security, nuclear power is making a comeback, and Oklo with its modular approach might be perfectly positioned at the intersection of innovation and geopolitical demands. Now let's flip to the chart. Since we first highlighted Oklo, the stock has surged, breaking through key resistance at $40 on heavy volume and establishing solid support between $52 and $55. Even more encouraging, the 50-day moving average is trending upward, confirming bullish sentiment. Quick breakdown. A break above $60 confirms momentum is continuing, while a pullback to $52 to $55 could be a potential long-term entry for latecomers. Slightly elevated RSI suggests healthy consolidation. If you entered under $30, you're sitting on gains. Taking partial profits here isn't unwise. However, if you believe in the long-term potential of advanced nuclear, especially as the world seeks non-carbon, non-intermittent energy sources, then Oklo might just be getting started. So, is Oklo still a buy? Long-term investors may still see value, especially if the company achieves significant development milestones and converts regulatory challenges into advantages. Short-term traders may want to watch closely for a pullback or consolidation to reload. But make no mistake, Oklo is a high-risk, high-reward opportunity in a sector that hasn't seen this level of attention in years. This isn't financial advice. It's a research-backed fundamentals meets technical perspective to keep you informed. Let's talk in the comments. Are you holding, buying more, or locking in gains? If you acted on our May call, respect. And if you're still hunting for the next 2x opportunity before the headlines catch on, subscribe so you don't miss the next one. Looking at these two AI tech stocks and the energy stock, which one has greater potential? Please remember to like and share. See you in the next video.